Meanwhile, Tencent has been busy in its home market too. Its online publishing platform, China Literature, made its debut on the Hong Kong Stock Exchange, and the response from investors has been stunning. Joel Flynn was there and sent this report.
Well, this IPO was as big as it gets for tech firms here in Hong Kong. Retail shares were oversubscribed by more than 600 times the amount on offer, so it was hardly a surprise to see the share price of China Literature soar at the open. Still, very few expected to see it become what local media were calling a supernova. At one point, shares up more than 100%. That gives the company a market value of nearly $13 billion. It did slip from that high, though, closing up 86%, but it's still the best performing debut in the world this year for a company raising more than $500 million according to Thomson Reuters data, at least. The ebook company's owner, Tencent, will of course be delighted with this debut, but so too will Hong Kong itself. The stock exchange, HKX, has been wringing its hands recently after seeing Chinese tech firms choosing New York and the Nasdaq for their share listings. Alibaba's IPO, for instance, last year, a particular sore point for them. Not everyone, though, was caught up in the fevered buying. Some have pointed out that the company price is currently trading at 201 times the profits it's forecast for this year. Compare that, for instance, to Tencent's own price-to-earnings ratio of 51 times forecasts. Still, that won't dampen the party for now. The question, of course, is what China Literature plans to do with this investment. Tencent itself, meanwhile, is planning a series of IPOs for other subsidiaries. Few, though, will likely be able to match today's.